Good evening, everyone. I, CA Shweta Panelia, is delighted to have this opportunity to address you for the webinar of the topic Internal Audit, Management Expectation and Perspective. First and foremost, I would like to thank CA Rajendra Kumar P, Central Council Member and Chairman of the Internal Audit and Management Accounting, and CA Charanjot Singh Nandaji, Central Council Member and Vice Chairperson of the Internal Audit and Management Accounting ICI. I would like to express my appreciation for the hard work and dedication of the team of Board of Internal Audit and Management Accounting. Also like to thank you, CA Aarti Bansal and Arunji for your support. This webinar is aimed to provide valuable insights into the evolving role of internal audit from a management standpoint, highlighting the expectations, perspectives, and collaborative opportunities that exist between management and the internal audit function. The purpose of this webinar is to foster a deeper understanding and a collaboration between management and the internal audit team. By shedding light on the management expectations, challenges, and priorities, we can bridge the gaps that may exist and work together toward achieving a common objective. Our distinguished speaker is widely recognized as a leading expert in the field of internal audit. With an impressive background, Speaker CA Dr. Chinnasamy Ganeshan has established themselves as a trusted advisor to numerous organizations, guiding them towards effective risk management, enhanced governance process, and improved operational efficiency. Sir has started his practice as a chartered accountant in 1988 and was in a personal practice till 2005. Then he served as a director in Lovelock and Lewis network firm of PwC for 6 years and as a partner in BSR and Company LLP network firm of KPMG for 6 years in the audit practice. Sir handled Indian and multinational clients in automotive, auto ancillary, IT, ITT, BPOs, KPOs, telecom industries market, consumer market, pharma, healthcare, transport and logistic, shipping management, BSRE, oil and gas, plantation, banking, financial services, insurance sector. He was also lead partner for many Indian and multinational companies and carried out audits, advisory, and international financial reporting, taxation, due diligence, and other assurance services. Sir is a founder partner of Messrs. Chinnasamy Ganeshan and Company Chartered Accountants Chennai and the senior partner and head of audit and assurance of Messrs. CNGSN and Associates LLP Chartered Accountants. Sir is specialized in financial reporting, including Ind AS, IFRS, and US GAAP, company law matters, audit, and taxation, and was conferred honorary doctorate for his extensive contribution to the Ind AS and IFRS by a renowned foreign university, and is a recipient of the Jewel of India Award for his role and financial service and Certificate of Excellence for his contribution in the field of financial service. Sir has represented more than 1,300 papers at various seminars, workshops, and conferences, both in India and overseas, on his specialized subjects. Also has assisted 80 plus companies on Ind AS transition. He has also authored a quick referencer on IFRS with model question answer, the revised Schedule 6 Ready Reckoner and IS quick referencer, reference reckoner for financial statement under Schedule 3 of the Companies Act 2013. Sir is closely associated with Institute of Chartered Accountant of India for past 20 years and is a guest faculty for all its pioneer councils, all its five regional councils. He was a co-opted member of the Accounting Standard Board of ICAI, the apex body for financial reporting standard in India, and Ind AS Transition Facilitation Group. He was also a co-opted member of Ind AS Implementation Committee of ICAI, the committee involved in the implementation of IFRS in India and Auditing and Assurance Standard Board of ICAI. Sir is also associated with many Chamber of Commerce like CII, FICII, universities like University of Madras, Annamalai University, Loyola Institute of Business Administration, Madurai Kamaraj University, Vivekananda College, and staff training colleges of RBI and CNEG. Sir is also advising many boards of Indian and multinational companies and was independent director in Board of Director of Railtel Corporation of India Limited, Mini Ratna Public Sector Undertaking, Minister of Railways, and presently in the board of Karur Vysya Bank Limited, a renowned private sector scheduled bank, and Bestar Microfinance Limited, a subsidiary of Muthoot Finance Limited. He is presently a co-opted member of Executive Committee of Institute of Directors, Chennai, Board of Studies and Department of Commerce in the Shiv Nadar University, University of Madras, and Tyagarajar College, Madurai. I encourage all our participants in this webinar to share your thoughts and engage in meaningful discussion and get benefited from our expert speaker. Requesting our speaker to start the session.
Thank you, Sweta. Thank you, the chairman of Board of Internal Audit team, as well as the vice chairman, for giving this opportunity of meeting all the members in an important topic where we were going to discuss about the management perspective and management expectation from the internal auditors. So when we are looking at this particular aspect, we may think that when we do a statutory audit, whether the management expectations are different, whether the management perspectives are different, compared to when we are doing an internal audit for an organization. Naturally, the expectations of the management and perspective will completely change when it comes to your role as an internal auditor or when it comes to your role as a statutory auditor. The reason is, when we are talking about doing a statutory audit, mostly we are concerning about the independency of the statutory auditor and reporting to the shareholders of the company. Whereas internal audit, if you see, even though we are saying that you also maintain the independence of your function and you report to the audit committee, in majority of the circumstances, the internal audit team will be part of the management team also. Even if an external consultant has been appointed, the expectation is that you interact with the management on a regular basis, not after the end of the reporting period, but during the course of the entire period of audit, so that you will be able to give alerts, you will be able to give warning signals, you will be able to give some sort of remedial actions for what has already happened. Or sometimes when we are looking at how we can prevent certain events to happen, or if the event has happened, what type of remediation which we have to take. So the management is expecting that these internal auditors has to be continuously in dialogue with the management compared to the role of statutory auditor. And the way in which the management expects the work to be performed also little different than what we see in a statutory audit. Maybe I can even say that the way in which we do internal audit and what the management is expecting, whether it's matching the expectations, what exactly is the management is looking for from an internal audit is what we are planning to discuss in the entire session. I must thank the chairman of the Board of Internal Audit and Management Accounting for selecting this topic and giving it to me for a discussion. And also the entire team of the Board of Internal Audit and Management Accounting of ICA for providing the opportunity and also to make the technical and other aspects of connecting with all of you. So let us look at what is there on our table. So when we are actually looking at, we are looking at only one aspect of the entire discussion. What is the expectation? Whether the expectation gap is a moving target. Because if I say that this is a management expectation and that will be static for years together, then absolutely nothing is required to be improved upon. But if the expectations are going on increasing or getting revised or revisited, or they expect something to be looked into with a specific eye of lens, then I believe that that is the way in which the internal audit function should perform to ensure that what management expects and what is their perspective has been properly taken care by means of the various audit procedure performed by the internal auditor. So accordingly, I believe that the expectations are not static. It's going on, getting revisited, revised, or revamped, and sometimes it may be completely new set of expectations which are thrown before the internal auditor. The reason is very simple. When we look at the activities of the stakeholders of a company, the stakeholders of the company are looking for the corporate governance framework of the entity is operating effectively, or the risk assessment made by the management with respect to the operations of the company and its sustainability over a period of time has been properly taken care by means of various control framework or various other activities which has been set up. So naturally, there are various stakeholders like financial institution, strategic investors, owners of the entity, or even minority shareholders, or we can also call them as non-controlling interest, independent directors, employees, customers, regulators, analysis, and of course, society at large. The expectations relating to the corporate governance is actually runs into multiple stakeholders. And accordingly, what is expected is what are their expectations from the internal audit standpoint and how we are actually meeting them. Is there any gap in meeting that, or is there any challenge in meeting the expectations? And how we are fitting the entire activity of the internal audit function into the best fit corporate framework. That's the way in which we are looking for. Maybe I will share a simple example. When we were sitting in the board as an independent director, maybe in the audit committee, and an internal auditor is presenting his report for the purposes of the audit committee, the way in which the independent directors are looking at, or the audit committee members are looking at the internal audit report is completely different from the olden days. In olden days, when the internal auditor is actually preparing his report, he might have carried out only a transaction audit. Now, the first question which we are asking when an internal auditor is making his presentation in the board is that how, in your assessment, the various risks associated with the business has been properly controlled and the risk has been reduced to the acceptably low level. If the risk is not properly being or adequately not being covered, what are all the possibilities of something go wrong? And in your assessment, have you come across any such instances of gaps and the possibility of that resulting in a magnitude of loss to the entity? That's the way in which the independent directors are asking questions to the internal auditors. When we were looking at the regulators, you might be now seeing that the regulators are not only pointing out their fingers towards the statutory auditors, but they are also looking at how the internal audit function has carried out the activity so that the stakeholders' interest has been protected both by the internal auditors as well as by the statutory auditors. So you might have seen that even in the case of Satyam, the internal audit department or the chartered accountants in the internal audit department has also been part of the regulatory or disciplinary proceedings, because the expectation is that they also have a responsibility, they also have an accountability, they also have a role to ensure that the corporate governance framework is properly fit in the organization. So that is the reason why we believe that what is the expectation of the management and how that expectation is coming from their perspective. Or they are just like the thinking about having a lot of things to be achieved by the internal auditor, or there is a rationale behind their perspective. That's what we are trying to look at in the entire game. And we will look at the expectations from the statutory auditors, from the internal auditors. From the statutory auditors, the role is very simple. It is an independent opinion on the financial statement. But when you look at the internal audit function, the primary focus is to provide independent assessment on the state of internal controls on the company. So when I say internal controls of the company and independent assessment of the state of internal control. So when I say use the word state of internal control, I'm trying to say, is it adequate? Whether it is existing in all the areas, if it is existing, whether it's operating throughout the year so that nothing can go wrong. So based on the assessment made by the internal auditor, sometimes the statutory auditor also planning his audit level, or maybe the way in which he wanted to decide the nature, timing and extent of the audit procedure. If the internal control system and the way in which the internal auditor has reported on the internal control system gives the comfort for the statutory auditor how he decides and functions or maybe plans his audit procedures with respect to an audit. So even though we are talking about an external auditor coming and doing the audit, sometimes the internal audit function becomes a backbone for the management to support the way in which the internal control systems is operating. And in that manner, there is an interplay between the statutory auditor as well as the internal auditor. Mutually, they are trying to depend on each other. And in the process, the statutory auditor, even we have one standards on auditing, which says that can you rely on the work of an internal auditor for the purposes of your statutory auditor? So that means indirectly it's saying that the work of an internal auditor can be relied on the statutory auditor for expressing an opinion, not necessarily only the internal audit function, but it can also be relied upon so that he can avoid the duplication of the work. That is the expectation. What actually our challenges are, whatever information which we are trying to take out, both for internal audit as well as for external audit, is the information handled by the management. So what the management provides to you is the basis for your start point of your audit function. So accordingly, if you look at the external audit is considered as a normal audit, but when we are looking at an internal audit, more than the external audit, they are believing that the internal audit function is of investigative in nature, or otherwise they believe that internal audit is a disturbance for their activity, or otherwise some of the functional people believe that internal audit is a nuisance because they are asking questions and they are intervening on the day-to-day activities of the enterprise. And in the process, they are also identifying the mistakes committed, and that is also highlighted. But unfortunately, they have the feeling is also mainly because it is a direct channel with the audit committee. In between CEO, CFO, all people are completely ignored by the internal auditor when he is reporting to maintain the objectiveness and the independence. He actually expected to report directly to the audit committee. Because of this, when the management expects that a lot of good things to be done by the internal auditor, the cooperation which is coming in from the various departments of the company could be challenging. I'm not saying that every company will be having the similar scenario, but when you look at some of the areas, it may be completely challenging to even get a proper data for the purposes of doing your analysis. That's a challenge which you are having. With that challenge, the statutory auditors are also giving certain type of additional concerns for the internal auditors. Because the statutory auditors are trying to find out whether the internal auditors have focused on the process, and in the process they have identified any control issues, whether that control issue has resulted in an instance of actual happening, and what is the impact of that actual issue which has happened. That's the way in which even the statutory auditors are trying to look at the internal audit report. In this particular position, we should also look at a new requirement which has been brought in by CARO 2020. Previous CARO versions are saying the statutory auditor has to report on whether the company is having an internal control system or internal audit system commensurate with the size and nature of its business. There is a matter. Now, CARO 2020 is saying that you have to report whether the company is having an internal audit system which is commensurate with the size and nature of its business, part A. Second part, it's saying, have you considered the report issued by the internal auditors in framing your audit report? In other words, the statutory auditors cannot simply do their audit and complete their accounting opinion without looking into the report issued by the internal auditor. And accordingly, the statutory auditors are expecting that the internal auditors have completed their role and at least a draft report, which is in the final stages, should be shared for their view before they complete their audit. Especially the challenge is very high when we are talking about a listed company where quarterly audits and quarterly audit committee are happening. So before I complete as a statutory auditor the limited review of the financial statements, I always look at one aspect, how the internal auditor has actually observed the issues. Okay. For that purpose, the statutory auditors are expressing, these are all my concerns. Have you scoped in these areas in your audit? In fact, one of the recent discussion when we were discussing about the level of credit rating, the credit rating agency wanted to involve the independent directors in their discussion, and they have certain questionnaire to be answered. And one of the questions they have asked is how frequently you meet the internal auditors and how frequently you review the observations of the internal auditor.
Sir, our Vice Chairman and Central Council member C. Charandra Sitanda has joined.
Okay. How are you, sir? How are you, sir?
Very fine, very fine. How are you, Mr. Ganesan, sir? Everything is fine?
Everything is fine, sir. Thank you very much.
Great,
maybe you can address the members for a few minutes and then I will continue, sir.
Great, sir. So very good afternoon, ladies and gentlemen. My very dear friend and a very learned and experienced speaker of the day, CA Dr. Chinna Swami Ganesan, the moderator of the day, CA Shweta Panelia, CRT Bansal, the Secretary, Technical Support, Ayaz, Arun Agarwal, from the board, ladies and gentlemen. It is always a treat to listen to Mr. Ganesan. I am listening to him from the times he used to speak at AASB, a man who's totally inclined into creating value and worth. I will not speak much because I want him to continue the session. I would just tell you that internal audit essentially is a sunrise area. Practice avenues are immense. 2004, I joined the council and I founded this board, which has now become a full-fledged board, including management accounting as well. So I want to tell you, my dear professional colleagues, that internal audit has so many things in store. It can always put you at a perspective where you are able to achieve professional excellence by devising innovative methods to serve your clients. Mr. Ganesan can take you through the entire genesis of internal audit. Importantly, you have to remember three things. Number one, when you do your audit planning, look at your people, use technology, create value, and ultimately see how you are able to add value through the process of internal audit. Second, internal audit essentially is a management function. You report either to the audit committee or to the board as the case may be. So very candidly, you should bring out how the board is benefited by your engagement. And third and final, internal audit can never be complete until you take care of the risk assessment. Risk is the appetite of the management, but you have to ensure that right risk appetite is being used, is being concluded. So as a third step, you have to look at risk assessment, risk mitigation, and largely advise the company how it could outset its competitors by giving them information. I'm really thankful to the board for inviting me, and my unconditional apologies for being late. In fact, I was busy in a meeting. I couldn't take the calls. So I'm truly honored to welcome Dr. Ganesan, a person who has always contributed for the cause of this profession, always ready to speak and add value to the initiatives of the Institute. Thank you. Thank you so much. You can continue, Dr. Ganesan.
Thank you, sir.
Thank you.
So that's exactly summarizes whatever Vice Chairman has mentioned is exactly summarizes what we are planning to discuss in the entire session. The three aspects which he has very rightly mentioned is the risk, what is the value add which you are giving, and what is the perspective of the management, how you are actually carrying out your activity on an independent basis. So that is the essence of the discussion which we are planning. And as we said that the statutory auditors are relying on the work of an internal auditor to decide the level of internal control being validated, as well as there is a duty-bound exercise which the internal audit, the statutory auditors are to look at the report of the internal auditor on before they finalizing the audit report. The challenge actually comes to the internal auditors. Every quarter before the statutory auditor meets the timeline. Say, for example, if it is a listed company, within 45 days from the end of the quarter, the statutory auditor has to complete his limited review. So for that purpose, before he completes, he wanted to look at the internal auditor's report, maybe 10 days before. That means within 30 days from the end of the particular quarter, the expectation is, where have you covered the transactions as well as the processes, as well as the financial statement items relating to the particular entity for the particular quarter. So really challenging. And accordingly, how the statutory auditors are having, or what are all their concerns relating to financial statement audit, and how that will have an interplay with the internal auditors from the management point of view, and how the management is expecting that the internal auditor should give the comfort even for the statutory auditor. Let us look at the various levels of expectations and concerns of the statutory auditor. The first thing is, some of the audit committee has asked this question because the statutory auditors have asked the same questions to the management and the audit committee. In their view, how they believe that the performance of this company has been benchmarked with the industry or a similar company. And if there are any spikes, maybe upward or downward or increasing or decreasing trend, the variation was different, significant, have they deep dived and checked whether the numbers are really smelling good? So when I do benchmarking and see that the normal gross profit margin in an industry is going to be, say, for example, 24%. And if this particular company is having 40% or 50% of gross profit margin, why there is a different perspective or different number? And what is the reason behind that change? And based on which I can say that the number also smells good, and there is no issue relating to that number, is a real challenge which the statutory auditor is posing on the internal auditor. And of course, the statutory auditor also wanted the internal auditor to look at if there is any off-balance sheet items not recorded in the books of accounts, but the internal auditor is coming across during the course of his internal audit, because some documents might have been verified by the internal auditor, which may lead to a situation to understand there could be a possible off-balance sheet item like a contingent liability or a claim which is not recorded, it is not shown to the auditors, etc. Have the internal auditor come across any such items? So off-balance sheet items also a perspective or concern of the statutory auditor on that. And sometimes, what is the management estimates? When the management estimates is being validated by the statutory auditor as part of the standards on auditing. But what the statutory auditor is looking from their perspective, from the internal auditor is there a system to have assumptions and working of the estimates properly, and there is no biased view by the management in respect of the estimate being calculated. So that is also the statutory auditor sometimes relies on that. Most especially, the statutory auditor is worried about areas of judgment, and to that extent, he may look at how the internal auditor has handled a similar situation or similar area, and what is his conclusion and what is the basis for his conclusion, so that the statutory auditor can also evaluate what the management has expected, what is their perspective, how the internal auditor has evaluated the management perspective, and what is the conclusion arising out of it, and whether it is matching with their own estimate as a statutory auditor. So that is another area of management perspectives are coming into the play when we were looking at the statutory auditor and the internal auditor. The management as well as the statutory auditors are also expecting that what is a control relating to suspense or clearing accounts. For example, if there are control accounts and that control accounts is not being properly reconciled, validated, and cleared on a periodical basis, there could be a possibility of something being dumped there because nobody is looking at that. It can be taken as the dumping yard where the desired result can be achieved. So accordingly, by the particular, maybe even the functional head is trying to achieve. Accordingly, the expectations of the management is also looking at what is the periodicity in which the suspense account or clearing accounts have been cleared, and what is the controls which are expecting. Similar perspective is also coming from the statutory auditors, how the internal auditor has performed their role with respect to this area. Can I draw some comfort from out of it? More especially, both the statutory auditors as well as the management is expecting that wherever there are complex business transactions, whether the accounting policy adopted or the way in which the business transactions have been entered into are acceptable, or there are some creative accounting. And of course, the statutory auditor's role stops with whether the accounting policy has been properly applied for and consistently applied for. Whereas when we are looking at the same thing from the management perspective, how they are looking at the internal auditor, the moment there are complex business transactions, the management is expecting that how the accounting for the complex transactions have been done by means of a proper control system, and whether there is a business reason to enter into that complex transaction. So the propriety angle is also comes on the shoulder of the internal auditor to look at whether complex business transactions are really required to be entered into. For example, if the entity is entering into a forward contract transaction and they don't have any foreign currency exposure, maybe the foreign currency transaction will be some sort of speculative transaction. Whether the speculative transaction is really required to be entered into is the expectation of the management. And of course, statutory auditor will only look at what is the reason for, what is the forward contract entered into, and what is the accounting procedures which they have applied for, and whether the accounting treatment is in accordance with the financial reporting framework. Whereas the statutory auditor is stepping into the shoes of the management and trying to find out who has entered into that. Is it a necessity for entering into that particular type of transaction? Whether it is within the what we call as the authorization matrix, within their powers. Similar to that, one of the issues statutory auditors trying to rely on the internal auditor is the pressing deadlines. I have already told that the pressing deadlines is 45 days window available for statutory auditors, whereas only 30 days window may be available for internal auditors. So both people are working with the pressing deadlines. How the internal auditor can ensure that all the expectations of the management, all the expectations of the statutory auditors, or the concerns of the statutory auditor have been properly addressed. And of course, how we meet the expectations of the other stakeholders as well. So coupled with the concerns of the statutory auditors, and for every concern of the statutory auditor, what is management expectation and the perspective, so that the internal auditors can actually contribute as a value addition to the entire framework, is also a point which we have to look at. Okay, one second. Sorry. So the next issue arises is not only the concerns of the statutory auditors, but also of the internal auditor, is to look at, is there any performance pressure by the management or any staff members, or there are any incentive for some special accounting treatment, or is there any incentive which they can gain? For example, the moment we are saying that there is an incentive which is based on the profits, there could be a possibility of pressure of incentive being achieved. So there could be a possibility of overriding of the controls which are existing. Could be a possibility. And another possibility which we have also seen is the pressure of performance. I have come across one such situation. We were doing an audit of a company where the company's policy is to collect all the debts within 6 months, because all the subscribers or maybe the customers of the entity is supposed to make the payment within 30 days from the date of invoice, otherwise the service will be disconnected. So when this type of activity is there, the company on a conservative basis has also estimated that some of the payments which are outstanding beyond the due date can be collectible within 6 months, according to their experience. If it is not collected within 6 months, then they believe that the possibility of collection is remote, or maybe it's doubtful. And accordingly, they make a provision in the books of accounts. And when they make the provision for the books of accounts, they also look at what is the way in which the controls for the provision created being collected, followed up and collected. So this is the policy. Let us look at the actual scenario which has happened. The independent regions will perform their activity. They close their accounts and send it for consolidation at the zonal level. From the zone, it goes to the central level for consolidation. So typically, like a bank, similar type of activity is being done by the entire entity. What we have actually seen was, when we have validated the adequacy of provision for doubtful debts, we have seen the accounting policy, and based on the accounting policy, we have tried to select whether all the items above 6 months old has been fully provided for. For that purpose, we have taken the aging analysis. More than 6 months is added up, and what is the provision there? We compared that, and with that we have closed that whether it is required, provision is adequate or not. That's a normal way in which you validate and estimate, right? But as an internal auditor, you cannot stop at that level. You should also see the controls relating to that, right? So we asked for checking the aging analysis, whether a particular invoice which is supposed to fall within the bucket of not due, 0 to 30 days, 30 to 60 days, 60 to 180 days, 180 days to 1 year, more than 1 year, etc. So like that, whatever bucket which they have given, whether a particular invoice is actually going and sitting in that particular bucket. Because if the bucket changes, the provisioning is also not correct, right? So when we validated this scenario, samples has been selected and validated. And of course, now that I'm talking about a scenario where data analytics is not in the picture. Now with the data analytics, we can even go for 100% of the data to be validated. So this particular case, we have selected some samples and validated with the actual invoices to ensure that the aging analysis, all the invoices have been falling under the particular bucket and there is no issue. But when we selected some samples, some of them are not matching with the buckets. Something are falling more than 6 months. When we went, the team member went and asked, the particular regional head has said that, no, there could not be like that. Let me look at the aging report which has been given to you. And next day morning, he volunteered and came and said to the audit team, saying that the aging analysis which has been given to you seems to be wrong. This is the correct aging analysis he has given. When that aging analysis has been validated, all the exceptions or all the mistakes which we have identified is not there. If we stop at that level, we are not meeting the expectations of the management. We are not looking from the perspective of the management. So the team member has asked only one valid question. The team member asked a question. The report, aging report, has been generated by the system. One Excel file has been given with errors. Another Excel file has been given without error. How it is possible for the system to bring out two different reports using the same data? So they have gone to the lower level people who has given the aging analysis, selected some more additional samples and validated with the new aging analysis which has been given. In the new aging analysis, again, there are some exceptions, not the original one, but there are new exceptions which came in. So the moment it has been identified, we normally call an internal audit. When first error happens, it may be a mistake. When a similar error happens in the same area with the same type of activity, we call that as a trend. So the third validation which we normally try to do is that whether this trend is a practice. The trend is becoming a practice. If I assume that there is a practice, then somebody is actually intentionally overriding the controls which has been brought in the system, right? So we verified without the knowledge of the senior person who has actually told that the data was wrong and given a new data. The team went ahead and checked the previous period also and found out that whatever aging analysis which has been given and what is in the calculation taken for the purposes of the provision for doubtful debts are not matching. So there is a deep dive which has to be done. So the partner is involved. The partner has looked into and he suggested for a deep dive. And before doing the deep dive, the partner has also looked into, based on his experience, what is the need for him to make a lower provision? Because it's only a regional head, right? Why he should be worried about making a lower provision? Whether it is a direction, indirect direction given by the management to all the regions to make a lower provision by manipulating the aging analysis. So the auditors of the other regions have been alerted and they have reported that there is no such issue. Okay. So accordingly, it is narrowed down to only one particular region. So when we have deep dived into that, we have seen that this practice of making a short provision is the incentive for the regional head, because if one of the key performance indicator for his variable pay is that how much provision for bad debts has been created or doubtful debts has been created. Okay, with that incentive existing, we have gone again to identify the magnitude of the implication. And you will not believe that there is a shortfall of around 40 crores of provision to be made by the particular region. And accordingly, for the past 5 years, he is not entitled for any incentive or variable pay payout, but he got all those amounts for the past 5 years. So with that scenario, whenever management is looking at the internal auditors, they are looking at one aspect. It is not the same role which we are expecting you to perform. your roles are changing. And because it is changing, not necessarily because of the governance issue, but it may be because of your expectation to look at the strategy of the company or the outlook of the company, etc. So, for example, when I look at the internal audit role, is which there is one question which has been asked in a survey, in which they have asked which aspect of the internal audit role is of primary importance in terms of value to the statutory auditor and to the management. So if they have only asked about the statutory auditor relaying the work of the internal auditor, and accordingly, it will be restricted to the areas covered. But when it is added to the management also, which aspect of the internal auditor's role is primary importance? The interesting outcome of this is 72% felt, or maybe the expectation is that assurance that major business risks are being managed appropriately is the expectation or the value add you can give to the statutory auditor, to the management. So management perspective is the internal auditor should exercise his due care to give an assurance to me that the business risk which are major to the entity has been managed by the various stakeholders or various departments in a very, very proper manner. And nothing to worry about whether they have done this activity differently or it is anything which I have to look at. And another interesting factor which we are looking at, 72% has talked about managing major business risk. Another 68% have talked about, I need an assurance from the internal auditor that the internal control framework is operating effectively. It is not just a mistake on the numbers. One voucher has been captured with a wrong entry. They are not bothered too much on that. They are actually looking for what type of controls are existing, and that controls whether it is operating effectively to prevent any possible scenario of error or possible scenario of somebody committing a fraud. That's the way in which they are looking at. 68% is believing that the value add will come out of that. There is another interesting area, or people have felt that the management as well as statutory auditor felt that I have made a risk assessment because as a business, I do my risk assessment. That risk assessment which I have identified is correct, or there are some new business risk. Maybe the way in which the business carried out has been changed, or the policies and procedures have been changed, or the people or the management side people have changed, or key management personnel have changed. Because of that, a new business risk might have arising due to the new process, new policies, etc. How that has been identified, 41% of the people who have been survived felt that that is a concern of the management and that is an expectation of the management. And of course, 30% have said that detection and prevention. So detection is if something went wrong, the internal audit procedure should be able to find out that error or irregularity or fraud, whatever. Similarly, they also believe that there should be a prevention of fraud. So, not necessarily after the event has happened or the instance has happened, they are also believe that you should be able to prevent it upfront. And for that purpose, are you satisfied that the procedures, policies, internal control systems are operating effectively throughout that period? That's the reason why people who wanted to talk about fraud also felt that the internal control system is proper, I'm all right. And people believe that why business risk should be managed appropriately. If we have concentrated as an internal auditor to look at the major business risk, the possibility of risk of material misstatement in the financial statements, as well as loss of money, the magnitude of the loss of money or loss of opportunity, etc., can be prevented well in advance. That's a way in which they are expecting from the internal auditor. That's a changing scenario. And again, when the regulatory environment is rapidly changing, meeting the expectations of the regulator is also becoming one of the expectation of the management. So what the management believes is that even though I have a compliance officer, as an internal auditor, have you validated the various regulatory compliance? In fact, whenever you look at the scope of the internal audit, normally they will also say that compliance audit should also be part of the internal audit. Previously, nobody was worried about compliance. They are only worried about transaction. If there is a mistake in the books of accounts, that's the way in which internal audit has been performed. Now, nobody is bothered about whether there is an error in the financial statement which you are identifying. They believe that there are various levels of people who are looking at the financial statement, various levels of people who are reviewing the financial statement, various levels of people who are looking at the variance analysis with respect to the financial statements, comparing that with the previous year figures. And to that extent, if there is any spike which is happening, people will be deep dive into that and they will be able to find out whether the error can be corrected, how the error has to be corrected. But what I am expecting is that no error has happened in the financial line item, but at the same time, there is an error which may happen because I have not complied with the regulatory requirement. That regulatory requirement may result in the company's ability to continue as a going concern also. For example, when I'm talking about the regulatory environment, and the regulatory environment requires that I should have proper safety measures being installed in my factory, or I should have put in place the pollution control related controls and improvements so that the pollution control board or the regulatory authorities visits, I will be able to demonstrate that clean or green environment is being maintained in my factory. Or some of the industries like chemical industry or other industry like leather, etc., the pollution control board compliance is more critical than anything else. And it may result in that if you are not having the required pollution control board certificate, your business will be asked to close down. So sustainability and continuity of the business itself is a question mark if the regulatory changes are not being properly addressed. So accordingly, the expectation is that from the management perspective, what people believe is that the risk management practices in India significantly improved based on the internal audit function. And they believe, almost 73% has confirmed that this has been achieved only because there is a proper internal control system. And the internal control system has been validated by the internal audit function that it's operating effectively. So risk management practices has to be improved, but there is significant improvement required. It's not already existing. They believe that it's significantly improved. So who will contribute to that need? Definitely the risk assessment, validation of the risk, what is the control procedures required to reduce the risk to the acceptably low level. All this will be the expectation of the management from the internal auditors as well. Another interesting factor is that when we are looking at the performance of even the internal independent directors, their performance should require significant increase. And now the role of an internal auditor comes into the picture here also. How the board evaluation is happening, because there is a requirement under the Companies Act as well as in the listing agreement that whether the board has been properly evaluated and the value add they are creating to the company. If some of the board members are not really contributing, that should be the result arising out of the evaluation, so that the company will be able to make corrective action to remove them and put the person who will be able to perform the expected requirements. So now that evaluation of the function of directors are extended even to the independent directors. Independent directors are expected to make a self-evaluation and should make an evaluation of the other board members, and that should go to an independent committee. That independent committee will evaluate the entire thing and identify whether the performance has increased or not yet increased. Okay. So when this is being done, there is a role which is expected to come from the management to the internal auditors, how this entire process has been properly carried out. There also the function goes into that. And this is the worry why internal audit is more essential, because 62% of the management believes that the skill sets of the audit committee is not high. It is medium in certain levels and it's very low in certain cases. And accordingly, the audit committee is not actually discharging the responsibilities expected from them to safeguard the interest of the company. And to that extent, the additional comfort can be coming only from the internal audit team or internal audit function. So that is again the expectation of the management. And another interesting point is that how the information is being sent to the board for them to evaluate whether the information given to the board is a correct information or not. So in fact, when we were doing an internal audit activity, they have looked at MIS as a separate function. Whether the MIS function has been properly controlled, all the risk of material misstatement has been evaluated, and the MIS is reliable and it is relevant informations are put in place. So that is the expectation of the management, especially the board members. What comes to me is a correct information, and what is given to me is a relevant information. What is given to me is a reliable information. The source from where that information has been brought in is also an interesting point which we are supposed to look at. So the management expects that can the internal auditor validate and provide a comfort to the audit committee. In fact, in some of the audit committees, we used to ask the question, have you checked independently the reliability of the source of the data which you have audited? So we are not asking the question whether you have received the information. We are actually asking them, you got an information. How you have believed that the source from which you got the data is reliable. That means like an aging analysis which was directly taken from the system is more reliable than which was converted into an Excel file and handed over to you. So what is the source of the data and whether the source is reliable? That is what the management is expecting to give the feedback through the internal audit system. And of course, they believe that the internal audit function and their responsibility should extend. Nearly 77%, if you say, highest number of people have felt that their responsibility should extend beyond internal control assessment, and they should also look at risk management process improvements. These two items let us look at. The internal control assessment, we are very, very familiar. There is absolutely no problem. But when we are looking at the risk management process improvement, we are deviating from a transaction audit. We are moving away from the transaction audit. That is the way in which the regulatory environment changes the way in which internal audit is functioning or how the management is expecting the internal audit to function. Management is now expecting, have you done your risk-based internal audit? What is my key business risk? What can go wrong in my company? Have you given a weightage to each of the risk? And based on the risk, have you assessed, have you carried out your internal audit? And can we have a comfort from your report? Once you report that there is nothing to worry about the risk and the risk have been completely controlled to an acceptably low level. That's part A. It's a complete change from what is being expected from the internal auditor by the management. Second, management perspective also looks at you are validating a process. You are trying to check not only what can go wrong in the process, what is the control which is being there in that process, whether the control is operating effectively. This is a normal work which you will be doing as a process audit. But what we look at is there any possibility for me to improve the process? You will not believe, I met one chartered accountant friend who is specialized in doing an audit of shop floor. That is a factory shop or factory manufacturing center. He has a specialist internal audit team. I'm just wondering, you're a chartered accountant, how you can believe that you can be able to see whether the manufacturing process is correct? You can identify a process improvement there, unless you are a technical engineer who can do it. Then he answered, the management, when they have given the work to us, they have also asked us to check, is there any possibility to improve my production process? The reason is, they believe that my selling price is a controlled environment. So government also has a play to decide on the ultimate selling price. I cannot go beyond my selling price. The only way in which I can ensure that I am able to sustain my profitability is by cost optimization. My cost optimization can happen mainly in my variable cost relating to production cycle, because majority of the cost, 70% of my cost is happening in the production area. If I could optimize the cost, or I can minimize the cost to even by 1% on the overall basis, my bottom line will significantly increase. So management has given a specific work to me to look at the shop floor. So I first went and saw what they are doing, but I'm not able to understand technically how they are doing, because management was set up a meeting with the production executive. They have talked about the production process, etc., etc. But still, I believe that I was wanting something. I was missing out something. So, or I may be lacking some skill sets which are required. So, what I thought was, I went and discussed one of my friend who is a mechanical engineer. And I discussed with him, what is my issue or what is my worry? And he suggested, can you take certain mechanical engineers in your team and use them in the validation of the production process? He said, I never worked with that type of thinking. He said, why can't you try that? So he engaged some of the mechanical engineers on a trainee basis, take them to the shop floor, sat with them, and started observing for more than 7 days what is the production process, and gave them a free hand to observe and report what has been done. The outcome was actually amazing. They have identified what could be the possible processes which can be cut short, and what are all the processes which are not required at all. What are all the processes where there is an improvement required, maybe technological or maybe mechanically you have to improve that technology, where you may require some additional manpower to speed up the process. Like that, they have identified and they have given a report. That report, when it was discussed with the production manager, is an eye-opener even for him. Normally, you believe that if I'm going and saying that there are some processes which you can avoid, or there are some processes which you might have reduced, the automatic reaction will be, you are only a chartered accountant and I am an engineer with so much of experience. How I can even discuss with you on the production process? That type of attitude will be there. Fortunately, in the particular scenario, the person who has been the production manager or plant manager was very, very receptive and looked at, and he believed that certain areas he was not even thought about it, because production is happening according to the schedule, the sales is happening according to the schedule. So he was not bothered about that. As long as the production schedule has been properly going without any problem, any major breakdown, etc., he felt that nothing to worry about it. When they have identified certain processes can be minimized, certain processes can be totally cut off. He felt that the technical evaluation seems to be correct. He actually tested on his own, and with that process, you will not believe that there is an increase on the bottom line by 3% of the total turnover. Just imagine 3% of the total turnover for a company. Let us assume that it's a 100 crore company. 3 crore is a straight addition to the bottom line just by controlling the cost. So the expectation is that what can be an improvement in the process, that also comes as part of the requirement by the management from the internal audit team. That's what I'm saying, that it's more and more is being looked at by the management. And of course, management believes that only 30% can be the expectation I can have from the internal auditor to contribute to me, but not more than that. That is the way in which they believe. But still, have you considered the fraud risk in your audit, whether it's a financial statement audit or process audit, or even when you are doing an audit of a process? Say, for example, I'm doing an audit of purchase process. When I'm seeing that how the purchase orders being placed, is there any possibility of somebody giving a preference to a particular supplier? If that preference is a normal course of business, or there is a reason intentionally behind that particular selection. In fact, we did an internal audit where we have picked up the data and done a data analysis. One of the query which we have given to the system to validate is that take the raw material code, or you identify a particular raw material, pick up that and check who are all the suppliers for this raw material and what was the value of supplies made by these suppliers during the current year and during the last year. Who are all the top 10 suppliers in the current year and in the previous year? In a normal course of business, what you will expect? Almost the top 10 suppliers will be similar. Maybe one or two positions they may change in the current year and in the previous year. When we saw that data, we identified that almost out of the top 10, 8 people who are in the top 10 in the previous year are not appearing in the current year. Instead, there is a new set of people who are appearing in the top 10. So when we went and checked with the management, they were saying that there are some quality concerns with the previous suppliers. Okay. If it is a quality control, immediately the next question comes to my mind is, if it is a quality control, how the inferior quality material has been accepted by the warehouse or by the inventory management team, and how the quality control team has actually approved this for production process, for taking it for the production process. So this is the first question arising out of this simple analysis. Second analysis, which we have asked the system to do it by means of data analytics, is this particular raw material, what is the average price at which it has been purchased during the year? And we have also given some disaggregated level. Every month, what is the average rate at which it is purchased? Is there any purchases which are more than 10% varying from the average purchase price? Believe me or not, when we made this analysis, it picked up some 15 to 20 entries which are more than the average purchase price during the period. So the immediate question which will come to our mind is, when I'm taking an average purchase price, I'm also looking at what is the last purchase price. So last purchase price, maybe the price increase might have happened. So it is going up. It averages out in a different scenario. So we have checked whether these purchases are relating to the year-end purchases or the month-end purchases. It is not so. It was throughout the period. So one additional thought which came to us is, from whom this purchase price is higher than the average price? This an interesting outcome. When we ask the system to pull out those data, who is the supplier of these items? out of the 15 items which has been identified as the higher rate, 12 items are from the same supplier. 3 items are from other supplier. So the team has gone to the next level. Out of this 12 purchases which has been made, whether this purchase has been made over a period of time or at a particular point in time, there is a necessity for purchasing it at a higher price, or the item has been purchased at the same time, the same item has been purchased from another supplier. We asked the system to check it up. The system picked up and said that the same raw material has been purchased from 2 different parties on the same date at 2 different prices. One party has been given very high level of price, another party has been at a near to the average price. When we went into that particular transaction, we did that for the month on month for the 12 months. When we compared this outcome, we also see that the particular person from whom higher rates have been paid, to whom higher rates have been paid, is also appearing for the first time in the top 10 suppliers compared to the previous period. Then the next question comes as an internal auditor. We found out an error. Error become a trend. Trend shows that there could be a possible practice which is being followed. We went directly to the management, not to the purchase department, etc. We directly went to the management and said that this is our observation. Is there anything which you believe that we have to go further into that? It was discussed with the managing director. The managing director looked at the information and he asked us, can we meet him after 10 minutes? He wanted the data to be given or the question has to be given. He wants to evaluate that entire observation for 10 minutes. And after 10 minutes, when we came, the first thing which he has said was, I never felt that an internal audit team can bring in so much of value add to my table. I am in the company for more than 20 years, but I never had this type of disaggregated level of information. The moment you have given the top 10 items, top 10 suppliers are varying, then I have identified there could be some preference which has been given. And when you compared this top 10 and also the purchase price, which are more than the normal average purchase price, I could narrow down the parties to whom the preference might have given. And when I have checked that particular party, how we have brought him into our supplier by means of our supplier policy, evaluation of supplier policy. When we have been asked, it seems to be a case where it was intentionally brought in by somebody in the purchase department without the knowledge of the top level management. And they believe that this requires a deep dive, and they have given that as a separate engagement to us to look at and see without anybody's knowledge what is the possible damage which might have happened. So we picked up and identified there are around 25 crores of excessive payment which has been made to the particular party. And of course, when you are doing a fraud risk, you are almost stepping into the shoes of an investigative personality. And also you are into a forensic audit. So accordingly, what has happened was, when the background has been checked with the suppliers, we have identified that that supplier is a close relative of one of the employee in the purchase department. So a simple information of a fraud risk assessment can lead to a lot of information by doing the analysis in a different perspective. Because when there is an opportunity, that is, nobody will identify what I am doing, 69% of the people will be able to do. That's what the managing director said. For 20 years, I'm in the production area, but I'm not even able to analyze this particular angle. So now, what is the process improvement which I'm bringing in to prevent the possible fraud risk element, right? That is what the value addition which the management is looking for. And the way in which the internal audit function has evaluated or evolved over a period of time is, let us look at the traditional approach to the modern approach and what you may expect in the future. what we normally do in a scenario of internal audit orientation, we have a checklist, we have a process, we have a risk, we have performance. So in a traditional area, there is no competition. Competition was very low, and we are oriented towards the customer. So customer, what is expecting, that is what is being actually addressed over a period of time. So accordingly, the entire internal audit will be focusing on financial numbers. Limited business understanding is only considered. Routine skill sets is enough to carry out the internal audit. That's what's the traditional scenario. When we look at the process, we are actually seeing that there is no major focus which has been given to operational areas, because the more focus is given only financial statement line items. And the next, when we were doing the transition from the low competition area to a serious competition area, or maybe a competitive market, we are moving towards the process and regulatory compliance based on sample. We try to validate the entire process, but the risk is the complexity of the transaction, the size has increased, business is increasing a significant level with a lot of complexities. Whether that has been focused, it's actually the risk-based consideration is not being given proper attention. That's the second level of transition which we are looking for. The next one which we are looking at is that in the modern level, maybe the present level I can talk about, is that changes are happening on a fast pace. Accordingly, there is a low tolerance for non-compliance, low tolerance for any mistakes or errors or even process level deviations. People are having a low tolerance level. So accordingly, what my role is, it is a validation of the process design itself and validation of the control adequacy. And I'm also looking at whether the business objectives of the management has been aligned with my audit procedures. But it is not at a very high level, at a low level, reasonably low level. And we started using automated tools. Like I'm saying now, data analytics, which we started using the data analytics, it is actually going up. But the problem is, the management still believes that the business objectives, the business strategies, performance improvement are not fully considered. So that is the feeling still the management is having. The reason why we are even structured the topic like management expectation and the perspective, management still believes we're doing a good job, but still I'm looking for something more, because I wanted to run the business, and only if I run the business effectively, I will be able to make out or address the needs of various stakeholders. Just by looking at what has happened in the transaction already I have entered into is not going to help me out. And how you are looking at the business objective, how you are aligning your audit procedure to give comfort for the business objective and process improvements is my expectation. So that is the modern level. And what could be the futuristic? Frankly speaking, when we were looking at the internal audit function at the present level or maybe at the futuristic level, people are not looking at the internal audit as a simple function. They believe that it's a very powerful function which can enable the management to run the business as usual, run the business more effectively, run the business more efficiently. The effectiveness and efficiency automatically bring in bottom line as well as the top line. So they believe that what they can do as a process, and if the controls have been validated and process improvements has been suggested, it is always possible for them. And what type of improvements which I can actually suggest for my client at the scenario, we are looking at more of what is the expectations of the management? We are moving out from the just focus on internal control, but we are looking at the design of the internal control, accuracy of the financial statement, disclosures made in the financial market. Even we call that as non-financial data. Non-financial data also the internal auditors are expecting to look at. So that's the expectation which is happening. So if you are looking at this scenario, the management perspective, what you can actually look at is what is the traditional approach and what is the expected approach. Traditional approach is process risk, your control-based approach, you have a periodical and audit plan-based approach, and enhancing the control focus. This is what your traditional approach, I'm saying in the modern world. But what is the management perspective or management expectation? When you look at, they believe that your approach should be not only process risk and control based, but you have to move to business risk based approach. Like what I have mentioned, that when you analyze your purchases or purchase cycle, but not only looking at the what can go wrong, but we have also looked at what can actually help the management to have a higher view or very detailed view of whether a particular line of activity requires a revisit. Okay. And accordingly, you cannot go on a periodical basis or an audit plan approach. You should only go on a real-time basis. And of course, you should also think about going by the business cycle-based approach. So you cannot a fixed period of every quarter I will go. If the business cycle, say for example, it's a seasonal business, and in one business cycle it will be higher turnover and all other period is very low. By doing your quarterly, it will not going to help you at all. So your focus will be more during the period where the business operations will be much, much higher. So business cycle based approach. And the real time, nowadays what happens is the internal auditors are expected to be, when they are in the client department, you have given access to your SAP or ERP, whatever you are having. On a real-time basis, can you validate the controls being properly carried out? And there is no one-off event which is passing on into the books of accounts? Or can you analyze these transactions and data and come out with a different view on the entire analysis? Like same item purchased on the same date with the different suppliers at a different prices. One high price, one is a very normal price. So real-time approach. The moment I am saying real-time approach, the problem for me is whether I have the required skill sets to carry out the internal audit as expected. That is what my issue is. And of course, coupled with that is business performance should be enhanced. That should be the focus. Not control should be properly built in. How the business performance has been enhanced, maybe by cutting down the cost, maybe by process improvement, maybe by identifying where something is going wrong or what may go wrong. So all these items is what is the way in which management expect that we have to enhance the business performance focus. And whenever we are talking about doing that activity, management expects that how the auditors are doing their work. The first expectation is, especially internal auditor, I'm talking about auditor means internal auditors. Internal auditors are supposed to start their work by understanding as is focus, as is varies in respect of the focus areas, that is the risk-based areas and the key processes. So understand the process. So we normally talk about statutory auditor should understand the business of the client. More than the statutory auditor, the internal auditor should understand the client's business at the disaggregated level. Maybe I can say process level. They have to understand the business. And the moment you have identified the process level and the focus areas, business performance enhancement, etc., you will be able to identify what can go wrong. Based on your analysis, you can identify what can go wrong. The what can go wrong is your risk identified and what can go wrong or the likely impact of that. and we have to respond to the assessed risk by means of developing audit program and internal control validation, process validation, etc. When we identify some deficiency or when we are identifying some errors, the first point which we are looking at is not just taking the exception as such, sorry, trying to identify what is the root cause for the exception. Is it an error, or it's a process deviation, or it is an intentional way of committing certain transaction? Okay. On that basis, you can look at the business performance improvement by recommending process improvements, cost optimization, etc. And based on which you can actually give your reporting. But of course, before doing a reporting, sometimes it is also required to have a proper documentation. Because in some audit committee, when the auditors have come in and made a presentation, we have questioned the internal auditors. Because I am supposed to sit in the audit committee chairman's table, and we have simply asked them, when you said that this may go wrong, this may go wrong, this may go wrong, hypothetically, I agree that it may go wrong. After you have identified this, have you seen, is there any instances of somebody has misused this gap? Or there is any process deviation? They are not even able to tell us. The moment they have observed certain exception or observed certain deviation, they simply believe that the entire thing is wrong. But what I have told was, yes, there is a control lapse or there is a process lapse, but what has actually is the effect of that? Is there any loss of profit? Or is it a fraud which has happened? Is there any wrong accounting which has happened? They are not able to do it because the documentation is poor. And sometimes when your documentation is very, very detailed, it will help you as well as your team to develop more and more expertise in the internal audit field. Now, this is a usual way in which management believes that you have to understand the business, key business drivers, top-down risk-based assessment, and evaluate the business risk. What is the test of controls or processes? Not only processes, financial reporting also. Normally, financial reporting, you will check it up, but the expectation is, have you checked over the processes and have you created a tailored audit procedures on key focus areas? This is an interesting point. Management has asked, when you have went and told that this is the areas where we are planning to do that activity, the first question which the management has asked, whether your team has performed understanding of the processes. He said, yes. Okay. In the process, what are all the key business drivers you have identified? We have told that these are all the key controls which may fail, which will result in that type of activity. Then they have asked, is it a general key control lapse or observation, or have you tailored your audit to our company? It's not even talking about our industry, our company, and apply that at least for the key focus area. Fortunately, we have done like that, and accordingly, it was helpful. So you are expected to make a tailored audit procedure for doing it. As I have said that on a regular basis, if you are interacting with that, the corrections of issues can be happening, and you can bring in a possible situation of a very robust internal control system by means of process improvement. So the key focus area normally is I'm just looking at this three. I'm just imagining if I'm making this presentation maybe 5 years before, whether these areas will be part of my key focus area, management and operations audit. Management objectives, whether it has been met by the various people, management perspective has been considered by me, whether management expectations have been properly considered by me in the course of, or I'm adding values to the management expectations? I may not have done. I might have selected samples to validate vouchers. And if the voucher does not have a revenue stamp, I might have reported that, or I might have said that your travel advance is not closed properly, second advance has been given before the previous advance. People will simply say, I still remember that one fine day, a simple statement by a management. It's a small partnership firm. We were doing internal audit. And we have observed that one employee is going to the bank on a regular basis. And we know pretty well he uses his own cycle, not even motorbike at the time. And he has his own lunch brought from his house. You know pretty well because we are regularly interacting with him also when we are sitting. But every day he makes a voucher for conveyance, voucher for food expenses. And the partner approves this. One of my team member has specifically picked up this point and said that, sir, this employee is actually making a bogus claim, because he is not actually incurring the expenditure, but he is actually doing it. We thought that it's a very, very big observation which we have made. Okay. But the partner has simply laughed and said that, Ganesan, do you believe that I never knew what he is doing? If I never knew what he is doing, I'm not fit to be sitting in the management's table. I know that he is making a bogus claim. Bogus claim he is making. But still I am allowing for one simple reason. If I am restricting him not to make a claim on this, maybe it's a very small amount of peanuts he is actually charging on me. What he will do? He will go to the bank, sit for 1 hour and come back. Whereas this man is sitting at the bank, ensuring that all the checks which I have given, post-dated checks or whatever, if the checks have no funds, he is immediately talking to the person from transferring from one account to another account to meet that. So managing my entire payable system, because I'm always having a cash crisis in my office. And accordingly, I need somebody who has to manage it at the banking level. So he is doing that. If I have questioned this particular voucher, he might have came back by going to that, sir, these checks have come, this has been closed. But now, knowingly, I'm allowing this expenditure, he is becoming more duty conscious and contributing this. And accordingly, I believe that this is an incentive I am giving for doing extra work for me. Just imagine management perspective. They are not worried about the small amounts which are going out. They are worried about what is my objective. I don't want any of the checks which I have given to, at the time, it's around 10, 15 years back, I'm saying that. So 15 years back when there is the internet banking and other things is not there, somebody going and ensuring that clearing checks when it come, immediately it is not returned, maintained for another 2 hours. Before that, he is transferring funds. He is taking that pain. The management's objective is to ensure that the trade payables and all the checks has been not returned. No dishonor of the checks. That reputation has been to be managed. Somebody is managing that. Why should I question him by making a small claim? That is the management perspective. I learned on the day that we should not do an internal audit just by looking at the numbers and asking for how this has been closed, why he is making 2 rupees extra claim, etc. That is not the management objective at all. The management expectation is completely different. Management expects that how their business and operations are being carried out. Is there any deviation in the way in which the management functions or the operative functions are being done by the employees? And that contributes to a significant drop in my profits or my top line. Can I improve it further? That was the expectation of the management. That is what the futuristic audit and present day audit. Of course, because of the compliance becomes more and more nightmare for companies, penalties have been just like that imposed on for even a small deviation by any law, maybe your GST law or your income tax law or your FEMA laws, etc., etc. So they believe that the compliance is very important. In fact, one of the client, when we were talking about the compliance, they have only the compliance report has been given only by saying that everything has been complied with. That the audit committee chairman has asked that everything is completed means what are all the items which has been completed. So when we looked at, we found that as usual, the report has been done. In one area, there was not a proper documentation done by the team. And it was missed out in the review by the manager also. So when management is expecting that type of compliance to be very, very rigid and robust, we should also have a lot of role to play as an internal auditor. And of course, process-related controls. I have mentioned that sitting in the production area and identifying the processes and whether any processes can be more efficient. Management expectations are so good, and my team can also have engineers, not necessarily only the financial statement auditors or the internal auditors or forensic auditor. I may even have engineers and technical experts to do that analysis. That is the way in which the focus area comes in. And of course, every internal auditor is expected to give some value add also, that businesses has been fully covered. Wherever I have revenue assurance, whether the end-to-end reconciliation has been properly done. And of course, internal control framework is operating effectively. The IT general controls have been validated. Is there any new businesses which has been identified? How detection and prevention of errors and irregularities could be done? And what is and this is another interesting point, which they have asked in one of the audit committee. They have said that you are also doing an audit of similar industries. Is there any best practices which you believe that we are lacking behind? Whether we can improve that business, best practices into our company so that business performance can improve. In fact, you remember that I was talking about benchmarking, right? When we did the benchmarking, we have also seen why a particular company in the same sector was able to make good profits or maybe good GP margins, whereas your margins are very low. We have identified their purchase process was centralized, whereas here it was decentralized. We asked them, is it possible for you to implement a centralized purchase system? Initially, there were hesitance for them to have a centralized purchase system because they believe that it was so costly or expensive work to bring in. But after 1 year, 2 years, when they have slightly started or inclined, we have pushed it again and again. When the centralized system came in, they have identified that they could first save a lot of fixed cost. And there is a possibility of ensuring very huge discounts in purchase price itself. And to that extent, there is no need to pass it on to the selling in the selling price. You are able to make out a better margins because of your improvements in the purchase policy and the way in which you are doing your best practice in that. I'm just giving one example. Like that, we have seen several possible examples. For example, in one particular scenario, they have a very huge issue relating to market changes because they are into some metal market and they have to always look at how the London metal market is moving in. And very simple change in the position may result in a crores of rupees being lost in like a speculative share market, similar to that. So they were using some consultant, they were using some experts. They are trying to do it, but still they are not able to avoid that. So one of the discussion when we were having is we said that in another company, they have a dashboard system. And then the dashboard system, they have monitoring that as a close, like a circuit dashboard in a broker's desktop. We have said that you can also do the monitoring of the movement which is happening, and you can also take a decision. And this data can be pulled out to do your data processing activity, and you can do an analysis. And based on the analysis, you can also see when a possible spike will happen and what could be the root cause. Suppose all of a sudden, if Ukraine war is coming in, it may have an effect. So like that, is this a change which is happening on a volatile basis, or because of some situation which has happened, and on that basis how you are able to do it? And of course, all the compliance audit, all looking at everything relating to taxes, indirect taxes, other laws. Of course, FEMA, if it is related, labor laws is also one of the important point which you look at. And of course, I believe that there is always an interplay between the internal audit and statutory audit. That is another expectation by the management. Management believes that internal auditor should not be an isolated or working on silos. They should have their scope approved by the internal auditor, statutory auditor, and at the same time regularly working on with the statutory auditor, so that the statutory auditor's expectation or areas of assessment of risk of material misstatement, the internal auditor could give some sort of comfort. Management expecting that also. In one of the client case, when we were doing the internal audit, the management has asked, I am unable to manage the expectations of the statutory auditor. Can you allot some specific staff to liaison between my team and the statutory auditor's team? That is also another expectation which is coming in. But I believe that the way in which you can achieve a proper coordination is when you take your scope of work, discuss with the statutory auditor and agree with the scope of the internal audit. Regularly you coordinate with the internal auditors and the statutory auditors on controls, transactions, etc., which can be done. You can also allow them to re-perform the test of controls you have done by sharing with in respect of significant account balances, class of transaction, or you can also corroborate the results which you have performed based on your audit, you have received based on your audit, and what is the result which was reached by the statutory auditor, and corroborate the results so that you can identify whether there is an improvement required in your process or maybe the statutory auditor's process. That is also another interesting point. And of course, you can supposed to do your substantive work also. So that's the way in which you can do an integrated audit program. You can do scheduled discussions with the internal auditors. You can think about the complex areas as opposed to the normal audit risk areas with the statutory auditors, and the internal auditors can coordinate. And what is the accounting and auditing issues which you come across, and what is the perspective of the management on those, and how the internal statutory auditors taking a view. So that is what is also expected to bring in a perfect coordination between the statutory auditors and the internal auditors from the point of view of the management. So the internal audit function has evolved over a period of time from one single point, which we have already discussed. Now it is expecting that you should have a lateral thinking, out of the box thinking. You should be able to do an advanced data analytics. You should be able to do a fishbone analysis. That means even the big and the smaller bones, how that will have an impact on the processes you can analyze. And it is also interestingly saying that one technique, you should wear 6 thinking hat, not just as an internal auditor, but also stepping into the management side, etc. The management is also expecting that you should do all these activities to come into the expected. So the reason why we are talking about management expectation that you should have a very detailed advanced data analytics team also as part of your internal audit team. The volume of information in the past, present, and future, when you look at, you will see that it's reasonably growing. But the complexity when you are looking at on the transactions are going to grow in a very, very exponential manner. So accordingly, unless you employ advanced data analytics, you will not be able to identify the data into a meaningful form and then arrive at a transaction like what I have mentioned. So accordingly, data extraction and then analyzing the data, and in the process, you are giving insights into identified exceptions and control weaknesses is what management is looking at from you. And this is what fishbone analysis, the problem is identified, but what is the cost towards that? It is not only the main bones, but also even the smallest bone, which are looked into. That is what the fishbone analysis, which is talking about. The six thinking hat is basically you wanted to be cautious, you wanted to be positive, you wanted to have a control approach, you wanted to be neutral, you wanted to also having an intuitive manner. That's what I'm saying, out of the box thinking. Sometimes you should also be creative when analyzing if there are new ideas which are coming in, how you are improving your audit process. So the management ultimately looking at, I don't want a traditional audit of just transaction. I'm looking my auditor to be creative, innovative, intuitive, and he's also have a positive approach without any specific bias to view, but on a neutral basis, not a fine fault approach. But the expectations from them based on their perspective is how the value add can be brought in with respect to the business performance. So they are not worried about your control weakness alone. They are more worried about what I can bring in improvement in the business performance and what type of best practices can be brought in by means of the knowledge of the internal auditor. That's the way in which management's expectations are changing, and their perspective has to be completely understood. Otherwise, it cannot be a successful internal auditor. So that brings me to the end of my session. If there are any questions, I will be happy to take the question. Of course, this presentation, I will leave it with the Board of Internal Auditors so that it can be circulated to the participants. My contact ID details are also available in case if you need any help at any point of time. You can also come through the Board of Internal Audit to me for any of your questions. So I've stopped sharing my presentation. If there are any questions, I will be happy to take the questions.
Sir, we have one question from Abhishek Thakkar from Dubai. Many audit committee gives very limited time, that is 30 to 60 minutes, to discuss whole internal audit presentations, which include audit plans, strategies, status, critical findings, implementation status, compliance, etc. What are your views on the sufficiency of time allocated by the audit committee to discuss the internal audit presentation?
This is actually a practical issue which everybody will be facing, including me. I have faced it because the board agenda. We should also understand from the management perspective what the board agenda is. Board agenda. If I'm sitting on the other side of the table also as an independent director, when we look at the board agenda, it comes with 22 agenda to be completed from morning 10 o'clock to evening, maybe before lunch or sometimes at 4 o'clock. So accordingly, the perspective of the management is trying to allocate reasonable time for various activities, but not very extended time. But if I have an observation, which I believe that it will not be enough for carrying out or maybe explaining to the audit committee within that point of time, because another issue which he is also talking about the sufficiency of the time is when one point has been projected on the screen and we are explaining that, some 3-4 directors will be pointing out their experience on that. They will be trying to pull the internal auditor towards that side. They will ask the management what is their response, etc. In the process, even with 20 points or maybe 10 points which I am having on hand, I will be able to push only 2-3 points during the entire presentation, and they will simply say that, sir, we have to go to the next agenda. Please make it fast. So for this, practically what we have seen is that we have requested the management to arrange for a pre-audit committee meeting. Now, every audit committee member is also feeling that as an independent director, they are also feeling that they are having lesser time to look into the internal audit report. So the moment you are offering for a pre-audit discussion, not a full-fledged discussion, but pre-audit discussion where you bring in your executive summary of all points, whatever is the key areas where they wanted to discuss, they will try to get explanation from you. And in the process, when you are going to the board, you can actually re-emphasize only those specific points. Other points, you can simply say that it's a noting point or there is a process improvement. But unfortunately, the way in which we try to bring our internal audit report, if I have compiled 120 pages of report, I wanted to turn the attention of the board to all the 120 pages. But what we have even decided in some of the board meetings where I'm the board member as well as in the audit committee, we said that the entire agenda point can be split into the board of directors. And what is the noting point, we will segregate separately. And what is the point which has to be focused separately, we are effectively spending on time. So as an internal auditor, you can also suggest to have a pre-audit committee meeting or a pre-audit committee discussion, maybe meeting rather than I can use the word, it's a discussion, so that it's an informal discussion where you can express your views on what you are planning to give. So it is not a surprise to them. And if they wanted to have discussion with the management, they will upfront to have the discussion and come back. So that's the way in which you can think about it. And you can also have a priority of what points you wanted to emphasize, what points you believe that it is not required to bring to the attention of the board of directors. It can be sorted out at the lower level itself. You have to do the priority. And that is the way in which you can effectively do the presentation at the audit committee.
We have one more question,
Yeah.
sir. When compliance part of scope is limited, can we make a list of all applicable laws to the client and their compliance based on confirmation of process owner and include it in our audit report?
In fact, that is a best practice. In fact, I have not talked about audit procedures which has to be applied for, because I'm coming from the management perspective and the management expectation. Practical way of doing a compliance audit is what he is mentioning. I normally have a checklist. When I'm taking up the assignment of internal audit for any company, we ask the team to create a checklist of what are all the laws and regulations which are applicable to them, and who is the compliance officer. If the compliance officer, before you just taking the compliance officer's report and adding it as part of your presentation, you have to validate the process in which the compliance officer is getting that information, validating the information, and non-compliance has been properly reported. The moment you have the control or you have the comfort, you can actually validate the compliance officer's report itself and then take it to the board. It's not simply taking his report to the board, but validating that report and do it. But that is what is the best way of doing it, because you will not be able to check each and every compliances. You will be having some key compliances required and also a lot of small compliances which may not be having a material impact. But the compliance officer is required to look at all the areas and how he is validating on a regular basis, periodical basis. You just look at if the process is okay, you can rely on the work by doing certain minimal activities and then take it to the report. That's a good approach, actually.
As we have limited time, we are taking one last question, sir. As an internal auditor, we face justification for deviation from good corporate practice, citing business loss risk and stating that it is not material considering the transaction process. Attitude issue we are facing from audit management. Any comments, sir?
Yeah, that is actually good practice, actually. That's what I'm saying. Management is not worried about each and every smaller items. If it is a material, if it's a trend, if it is going to happen as a practice, whether the practice has to be cut short and a remedial action has to be brought in. So if you believe that the amount is not material, so you can simply say that, in fact, my internal audit presentation to the board will start. We are reporting on an exceptional basis to the board. So all smaller items I have already discussed with the functional heads, with the CFO, with the directors, closed it. I am bringing only the significant matters for your attention. So accordingly, that is a good practice.
Thank you, sir. Now I would like to explain.
Thank you very much for giving this opportunity again.
We are concluding,
please.
sir. I would like to extend my heartfelt gratitude to our esteemed speaker for their valuable contribution to the webinar. Their expertise, insights, and engaging presentation made this event a resounding success, and we are truly grateful for their time and efforts. I would like to extend my gratitude to all the participants for their active engagement and patience listening. Finally, I would like to acknowledge the efforts of our team who worked behind the scenes to ensure the seamless execution of this webinar. Your dedication and hard work planning played a pivotal role. Thank you all once again, and we look forward to your continued support to participation in committee's future endeavor. Thank you all.
Thank you.